But what about 2023, I guess, was different for you?
Yeah, we have been in it a while, but it still feels so fresh and new. That's the great thing in and of itself. But I think what really is new is are really three trends that are creating incredible tailwinds in generative AI in particular. One is, of course, these massive data centers that have been built for the cloud that turn out to be quite useful for holding lots and lots of data. And that's the second thing, is lots and lots of data has been uploaded to the cloud or been digitized. We all kind of laughed when Google decided to digitize the world's libraries. Turns out that was very helpful for large language models, as an example. And then the third trend is that we all love gaming, and gaming has to process a lot of information very quickly, so it takes a specialized chip. So now I have the cloud, I have exposed data, and I have a specialized chip that processes data quickly. Oh my gosh, we have generative AI. So that's what's new and different and fun. And I think a good friend of mine, Joe Benson, said it so well earlier today to me when we were catching up, which is what we're witnessing is the transition of search to research. So instead of just asking recently for a place to go to lunch in LA, I asked ChatGPT for that, and it gave me an incredible layout of all different places to go and ways to experience it that was quite different than me just searching restaurants, on various search engines. So the reality is that this is quite different, and it's going to create a productivity boom, I think probably like we have not seen since the productivity boom of the late 90s and other periods of great technological innovation. When we think about our category of financial services in particular, this is different because what it can
Mhm.
create is productivity like we see at Roots Automation for things like making processes easier, but I've got to be an expert in AI to know how to apply it. You had to be an expert in AI to help us apply what we do at Vestigo related to finding companies, right? That took a lot of work. I saw a lot of sweat coming off your brow over the years. And we had to bring in a lot of really smart interns to help us with that. This is different. This is a lot easier. Even I can do some programming to be able to do some very simple, what I like to call parlor tricks related to AI today. So this is going to be quite a boom and allow us to create all sorts of applications that smart entrepreneurs go out to create once these forces have come together into the mix that we have. So I think stay tuned. We're just at the beginning of
Yeah.
the movie. It's going to be a good one.
What's been tremendous, I think, is watching this all play out in real time. I mean, a number of us were with one of our portfolio companies yesterday, and the CEO said after we'd been talking about some of the innovations here, he said, this is really making me think about how I capitalize the business differently pre-Copilot and post-Copilot. The productivity lift is certainly at least 2x. And in theory, it should only get closer and closer to 10x legitimately, just with sort of just in the software development use cases. So tremendously exciting, which is a good pivot to Nick Kim, who I'd like to pass the ball to. Nick, today you run the majority of our ML-driven sourcing work, and of course work closely with our portfolio companies on machine learning powered go-to-market. What's exciting to you? You inherited the tools that I had, and have gone well beyond it. And what excites you around some of the specific uses you're seeing for that technology today?
Yeah, so I would say like to add on to Mark's point around how much more accessible a lot of these AI models are now, like even just 2 years ago, I think when I joined and I inherited a lot of the work Fraser has done, and wanting to implement sort of the original LLM, which is BERT's, which is called the BERT model from Google. The process to get that fine tuned and to get it ready to actually kind of do these workflows that we wanted internally, took a lot of time. It took a lot of expertise, a lot of building, probably hundreds of different types of models to see how they perform. And I think a lot of that has changed over the past year or so, where now what you're seeing is extremely powerful models that out of the box are really strong at understanding the task it needs to complete. And with just like a bit of extra fine tuning, you can really get a lot of additional productivity out of it. So when I think of sort of how we use it for everyday use, or how I think about like how can you deploy these models into a portfolio company, it's really exciting how fast you can actually go look at a task, be like, hey, let me go ping an Anthropic, or let me go ping OpenAI's API and build like an initial prototype to see, can this could this workflow actually be automated, and be automated in a way that's really efficient and actually impactful to the business.
Mhm.
So I think that's what's really interesting today. And then and obviously around the go-to-market side, there's so much like alternative data out there, like all the proprietary data that a lot of these companies have built all throughout the years, kind of going through sales motions. And I think there's a lot of like really interesting ways you can apply this technology to say like 10x the productivity of a BDR, similar to what Fraser was mentioning, or making sure like you're really going after the correct ICP, by ingesting all these different data sets and like being kind of hyper focused as you kind of create that well-oiled machine, kind of moving
Yeah.
forward.
I mean, could you give the listeners, the viewers, a sense maybe, and make it approximate,
Yeah.
but the time it took you to, I mean, download BERT and get that set up
Yeah.
to make predictions for us versus the time and train models using our training data, um, relative to the time it took you to retrain the models using the OpenAI API?
Yeah, I would say that it was probably like 10x or at least 10x faster to build on top of
Yeah.
like say an OpenAI. Um, like building with BERT, there's already probably 15 or 30 different variations of that one model. Let alone like you have to design like how deep do you want your neural net to be and like a bunch of other kind of parameters that go into it. Whereas like with OpenAI, you go in, you know, pay a relatively low fee if you're as long as like you're not going too much into scale, to get a model that's really powerful with, you know, very little lift. And then obviously you can always make it a lot better as you want to fine tune it.
Awesome. Tremendous. And Kelly, shifting to you, we spend most of our time helping companies sell into enterprise, empowering them to build technologies for the enterprise. If you put your enterprise hat on, what are some of the opportunities that you see today, or problems that you're seeing where there are opportunities to solve them, build businesses around solving these problems, that, end state being creating a more sort of AI fluent enterprise ecosystem?
Yeah, great question, Fraser. Mark and Nick covered how easily it is to build AI now, but what that means is there's a rising number of models that financial institutions have to manage. We're seeing that grow 25% annually. And so enterprises that really want to drive adoption, want to accelerate that, are encountering a lot of challenges related to AI compliance and governance. They're looking to deploy around an environment ripe with uncertainty. There's regulatory scrutiny, a debate about how AI should be regulated. You, of course, have existing regulations, particularly around model risk management. We have the OCC, Fed Reserve's SR 11.7. And so what that means is that you're seeing a rising tension internally among financial institutions between their data science and their compliance teams. And so risk management essentially becomes that bottleneck to AI deployment. And that just puts more and more onus on those teams to, one, quickly validate those models, but of course, ensure that they're monitoring them on an ongoing basis. And so what we're seeing that mean is that large financial institutions are spending tens of millions, if not hundreds of millions, around model risk management, and the process can take up to 24 weeks. So exactly to what you're saying, we're seeing this opportunity for AI to essentially govern AI. They can reduce these costs, reduce the manual nature of it, and speed up that time to model deployment, while of course providing that audit trail that the regulators are going to look for. Beyond model risk management, I would also say there's kind of new thought that needs to occur around protocols and processes for protecting employees and customers. Just yesterday, we saw the news about how deep fakes are being used to scam employees. And we're seeing, the rise of the importance of KYC processes, et cetera. we're also continuing to explore how we can protect these financial institutions. The only thing that really does matter, though, is that we're going to need to see whether regulatory bodies will allow AI to essentially regulate AI.
Tremendous. And Ian, I think as a sort of natural follow-up, I mean, you perhaps more than any of us are spending your weeks talking to C-suite leaders across the enterprise, across marketing, sales, engineering, and of course, just executive leadership, not to mention board members, in your words, sort of, and how they're thinking about tomorrow today. And you're also our go-to guy on coaching our founders through the enterprise sales process. So, would love just 2 cents from you on the kind of pressure that these executives are getting from their leaders to deploy AI solutions, to think about AI solutions, and how that really relates to kind of the way that the founders we work with, and specifically the founders you work with, are kind of navigating that environment, because there is so much kind of top of funnel pull, and then as you go through the journey, how do you think about those two forces? What's resonated to you in the last few months?
Yeah, it's a great question. Let me unpack it this way. So first, I think we're in a unit cost evolution revolution. To understand that, we have to look a little bit back, that the investments in intelligent automation, as an example, have not delivered on the promises of change, specific sustainable promises of unit cost, efficiency, and improved ROI. So this is true across all financial sectors, and even in the studies that we look at, they cover telecom, automotive, and travel. This is well documented by third-party services like S&P, Accenture, and it's certainly, as you mentioned, echoed in our financial services network. So why, just to understand why, and then we'll get to the evolution revolution, these early automations were built on RPA models. They're brittle, they lack scale, they're people dependent to maintain, and many times when they break, and they do, new workarounds are created by the next generation or the new teams and their perspective, and they're developed in siloed paths, ending in a broken spectrum of promised improvement. And lastly, most processes rely on call it a cornucopia of unstructured data. This is the world that you guys live in. It's unique languages of narrative, manuscripts, regulatory compliance, legal, everything Kelly said translated into structured data, and unpredictable layouts. So here we are in this evolution revolution, and today we have a clear path with machine learning and AI workflow solutions that learn and grow as we see in our portfolio of companies. We could look at Clerky, we could look at Roots Automation, Formotive, Noble are just top examples. These companies have worked with massive data sets and reaching accuracy levels and fluidity of process we've never seen before. Nick touched on it in our own house, but these firms are working with massive data sets across sectors. These systems, unlike the old systems, get smarter as they continually learn from the environment. And unlike the open source models that we discussed, they're in fact working with client-specific, sector-specific data sets. So something every fiduciary compliance-centric leader cares about. And so we've entered the phase where we can process and communicate in natural language the entire workflow customer delivery. So why I'm excited about all this, Fraser, these early stage companies that we see every day, that we invest in, have the focus and have created something absolutely special.
Tremendous. It was funny. You and I were speaking with a couple of executives at a very, very large public company a couple of weeks ago, and you were giving them, pitch is the wrong word, because you were really just walking them through what Roots Automation was, how the system works, how the system feels, how we interact with the system, what the ROI is. And sort of without missing a beat, they were like, oh, wow, this is like literally the RPA we were promised. Like this is what we were promised. And it's finally here. And, I think you did a wonderful job talking about the ROI, sort of next gen RPA, that we need to come up with a different word. Cognitive process automation, I believe, is a expression we've been throwing around. But at the end of the day, like, one of our oft repeated phrases is it's our job to basically help startups to lower costs and delight clients. And so we've talked about lowering costs. Maybe you could talk about the design and delight factor.
Absolutely. So that you all know, and to the audience, design, delight, and optimization is part of our thesis of investing in early stage fintech companies. And to build on what Mark said, now with compute power and cloud services, the infrastructure for machine learning and AI, we can now focus more deeply on the customer value chain in ways we've never done. So that means we can look at each step from ideation to delivery and permitting greater investment and the time to understand that at each step, data is collected. And in that process, that data can be turned into valuable information to optimize the outcome. So let me give you an example. We've talked about Root, so I'll use that because it's top of mind, but it's true with all of our companies. In the case of Root's automation, we experienced the deployment of what we call AI digital coworkers that took the work of 16 FTEs and a process that took 24 hours and reduced it to AI digital coworkers. And the process of 24 hours now takes a minute. So what we're talking about, design and delight, we have now created a workforce. 16 people are now free to engage in higher level services to work with the customer. And we're all part of some customer chain at some point. Don't we want that?
Exactly. So I think we've covered in some detail last year, and but it's a review and it's also a look ahead today. So it's time to start looking ahead. I admit it is completely unfair to ask people to make predictions and stream it live on the internet and record it and then republish that so that we can reference this in December of this year. And that is why I will ask the questions and refuse to answer any. And Kelly, what are some things that you would like to predict for 2024, or at least things that may be interesting, arising trends that people should be on the watch for?
Sure. AI, of course, has been the big buzzword of 2023. And I think when you look around the corner past AI, I'm pretty optimistic about quantum computing in 2024. You know, we spent a significant amount of time around quantum a few years ago, and we've remained focused on that because it is a huge disruptor. And I think that's something, you know, as I'll talk about, that we're continuing to see emerge much more recently. And so for those on the call who might not be familiar with quantum computing is essentially a different approach to computing versus the classical computers we all kind of know and use today. Classical computers are built on bits, which is a unit of information that is stored as a 0 or 1, whereas quantum computers are comprised of qubits. And the interesting part of qubits is that they can store information as a 0 or 1 simultaneously. And what that means is that they're able to calculate this kind of powerful range or probabilities of different outcomes. It means that we can calculate optimization problems, simulations, and data analysis much faster and much more accurately, or at least that's the promise, if you will, of quantum computing. And so that has kind of mind-boggling implications in a lot of industries like cryptography, chemistry, logistics, and of course, financial services. In financial services, I think first and most importantly, quantum could completely upend cybersecurity as we know it. And then looking beyond cybersecurity, you know, they can run Monte Carlo simulations faster with better outcomes. There's other use cases around underwriting, trading, fraud detection, and risk management. That being said, like, the hardware is still nascent. It was nascent a few years ago when we looked at it. It's still nascent now. We need to see improvement in power, the number of qubits kind of that are being used, as well as a reduction in error rates before you see widespread commercial use. That being said, you've got big companies, Google, Honeywell, IBM, building that hardware. On the FinServ side, you have JP Morgan, HSBC, Wells Fargo. I could probably go on, hiring quant teams, partnering with them, and are investing in quantum computing. And so, you know, that is continuing to strike interest and build interest. But I think what's most exciting for 2024 is we're seeing the rise of quantum-inspired algorithms. And that essentially means that people are taking quantum techniques and using that, leveraging classical computers. quantum-inspired algorithms are more powerful, they can be trained faster, and solving what is seemingly becoming a big problem on the AI side, they actually consume significantly less energy than the traditional AI and ML. And so that could represent a really big solution to that energy problem that AI is facing. So on the Vestigo side, I'm really excited to kind of see what 2024 brings in innovations in the space. We've already seen JP Morgan with the huge announcement on their investment in Quantinuum's $300 million round, and I suspect we'll see more of that this year.
Tremendous. And conveniently, we are located about 3 blocks from the brightest minds in the world on this. So we will be prowling the halls of MIT as we always do. Mark,
Exactly.
Mark, I'm running out of clothing metaphors, so I'm going to ask you to put on your FINRA governor's shoes, and
Okay.
and maybe talk about how you're thinking about what you would expect to see, or maybe what you would like to see on the sort of regulatory side of AI, which is got sort of Congress excited or agitated. I don't know what the right word is. Probably excited, certainly not the correct one. But what are your thoughts? What do you expect to see in 24?
Yeah, I think you're just, of course, at the very beginning of what's going to be a lot of regulatory discussion and then regulatory action. And I think unlike other things we've seen where the regulatory action comes as a enforcement case, say from the SEC related to a number of areas of the market, or an enforcement case from the CFPB in the banking system, which then sets the rule. Here, it feels like the good news is the politicians and regulators are realizing they're better to get ahead of this and think about the issues that concern them and start to lay out blueprints for what they're looking for. And so one of the things I think is important is the president's sort of pronouncements related to issues of AI and how to do it. We did a summary of it in our newsletter, which I'd encourage people to take a look at. And that summary was a really good way of thinking about what is it that they're after? What they're after is fairness, right? At the end of the day, if the group of us are making a decision about making a loan, we would each have our own perspectives and our own view of something. And we would be able to espouse what that view is to say whether we should make the loan or not, and we could document that. That's a pretty easy process. If we're making an investment, we already do that, and we do that manually today, right? We write an investment memo, we debate and discuss it, we then take a vote, and away we go. So we can easily track that. But an AI doesn't work that way, as we know. It basically takes all this input, everything it's learned, and then it essentially takes the new data and comes out with an answer. And that's not a transparent process, right? That's a box that creates an answer without really telling you how it got there. And it really can't tell you how it got there because it's taking millions of years of learning and applying that to this particular case. Plenty of examples of where it's done that incorrectly, plenty of examples where it hallucinates, it creates answers that don't really exist because it's the early days of some of this technology. So what I think is an intelligent part of regulation is to say, what's the outcome here? I think trying to take apart the box, right, and trying to understand what's in there is near impossible to do. But getting to the answer of why did it choose what it chose? How do we test to make sure it's doing that fairly? Those are very logical ways for us to regulate the use of AI. So I think we'll get there. I think there's good discussion about it from the places we all listen to, and there's I think an intelligent way of thinking about outcomes. And hopefully what will happen is that as regulators think about it, we don't get into a fight over understanding every single way data transfers through these large language models. That won't be possible. I think the other thing is we have to think about it's going to become quite political. Is the impact this will have to productivity? There is no doubt that you're massively more productive. I just think of simple things that I can do on a daily basis to help with supplementing writing, helping someone answer a question to something. It basically can do the research for me that I would have found when I was a CEO that I had to have a project leader do for me, right? Or I had to do through a personal assistant of some type. I can do that now in just a few strokes of the keyboard and get that done. So you're just seeing the beginning part of that productivity. Well, by definition, that means that then somebody wasn't hired to be on that project role that was there. I'm a big believer that we will come with many, many more jobs that are interesting. I'm not worried about massive layoffs and a need to think about it, but I am worried about the retraining that's going to have to occur. And that's the other area of regulation that we have to be thoughtful about, is what is it we're going to do as a country, as a business, to think about how we're going to retrain people into the new roles that we'll need them to be part of. We all know education is important. And so, we generally try to get more and more people to go to college. And, people today will ask me, should I go get my MBA? Or what should I do? And I'll say to them, you'd be better off learning programming language and learning how to do some of that work than you would be to get an MBA, unless that MBA is from an incredible school. You'll actually have more use cases of learning Python than you will, the principles at an MBA school, because the principles are things that are really filled with common sense and those things. But if you go to an amazing school, right, it's actually the network that gives you the power. Speaking as someone who went to an okay school for this MBA many, many years ago. And so long story short is, I think we're at a stage where we have to think about what are the educational impacts, to this, and how are we going to make sure that we're putting in place ways to help people retrain skills. And that's going to become a political issue that's part of it, which could then blow back into regulation. Let's stop it, right? Let's, if we all remember, the same kind of worries and concerns that occurred during the steam engine age. And the idea was, we're going to break the steam engine and we're not going to use it. Yeah, that's not a choice here. We're going to be using this technology. That's where the term Luddite came to, right? Is the idea was, we're going to go back in time and do things the way they used to be done. That is not possible to do. This new capability is out in the world and already making an impact. So what we've got to think about is, what are the impacts it's going to have in fairness, in decision making, and how we think about reskilling different types of people for what the new world is going to look like. So it's going to be a fun time as it relates to this issue, and I think quite interesting in places like the Board of Governors of FINRA, or the SEC commissioners, or obviously the political entities that oversee these issues as well.
Well, Mark, speaking for myself and everyone, it's not too late to run in 2024. There could be a third choice. You also said something quite alarming when you were talking about, a project leader doing this kind of research work that wouldn't have been hired. What I was thinking was, or a Fraser Anderson in 2018. So thank God ChatGPT didn't come out for until a couple of years ago. I just certainly don't want to reskill.
Well, Fraser, remember we put you through a math test, and that math test for Vestigo has only evolved with it's probably impossible for any of us to complete now with Nick's added questions to it. But that part hasn't changed.
That might have saved me, because ChatGPT is bad at math. So maybe I can't be replaced by AI.
Well, I think it's all part of this issue of what does this box do when it gets data and it does these issues. And so I think one thing, Fraser, you work with is on Noble. So we're going to force you into a bit of a prediction when you think about its impact in the world, and the way that it's trying to go after customer service as a way of dealing with it. Maybe Nick, you could describe what Noble does for the benefit of everyone on this video. And then Fraser, you could talk about how you think about that evolving over time.
Yeah. Well, I mean, I think let me just tee off quickly, because I think when we saw the early outputs of these LLMs, I think we were all pretty floored by what they could do. And immediately we were thinking, well, every service job is going to be essentially disrupted by this, or any text-based service job will be disrupted. Then, of course, the problem with hallucinations started to come into play. And not only do you go, well, that's brand risk, but for financial services, like, you have real regulatory risk. That means fines. Like, you actually can't have that. So then, the sort of next thing is, well, we'll just kind of use RAG, and we'll put up these guardrails around the outputs, and that'll keep us safe. But, you can't really actually do that at scale, especially when the consequences are so high. And then, when we were lucky enough to meet the Noble team, and got to understand how they're using sort of generative AI in the back end. I mean, Nick, this is probably a good time for you to interrupt me before I say something incorrect about what kind of solution Noble delivers and how they do it.
Yeah, no, happy to answer that. So I think, like, what's really interesting, or to kind of go off of Fraser's point around, like, trying to deploy these LLMs into an enterprise today, I think what a lot of people are worried about are sort of like the hallucinations that Fraser was talking about, where you might have these LLMs that are relatively a black box, like you're not really sure why they will create a certain output. And then as an enterprise, when you're having it kind of send something out to an actual end customer, you can't have that risk. So what Noble developed was sort of an enterprise-ready platform that they've integrated a bunch of these LLMs on the back end and then formatted it in a way that they can only give out text that is like marketing approved or like completely compliance ready, where you're not going to have that risk as an enterprise anymore, where this LLM spits out information that it's not supposed to be saying. I think at some point there were some there were some rumors going around where like you would have like a chat interface for a really large car company in the US that was giving out information on, oh, maybe you should buy a car from a different business, which obviously you would not want to be happening as you're looking for a new car to buy. So I think things like that is what Noble's really solving, and I think it's a really big it's a really big friction point for like sort of the adoption of like kind of LLMs at scale.
Absolutely. And I think it's a very important differentiator that they, I think, have done an amazing job of articulating, because it is a crowded space in the sense of, it seems like most enterprises are making, if not high single digit, low double digit bets on AI in terms of the vendors or partners that they're experimenting with. So I think the question of defensibility becomes like even more relevant than it sort of always has been. Kelly, maybe you can explore that theme a little bit.
Yeah, happy to. As you mentioned, it's getting easier and easier with APIs, with AI to build. And so as a startup, if it's super easy for you to start that startup, it means it's super easy for many others, unless that happens to, of course, be your core research and your PhD or something like that. And so when we think of defensibility, one of the core areas is data, which we've talked a lot about. Do you have proprietary access to data that can train more powerful models than others do? An example that really comes to mind there is Calculum in our portfolio. Calculum essentially leverages a supplier intelligence. They have a massive database of suppliers. And then they can look at that and benchmark across industries. They can identify payment term opportunities to unlock working capital. And so they kind of solve this cold start problem, if you will, just given their huge background in the space, data that they already had. But that's what's also interesting is the network effect of adding on each enterprise. And so, for me, when we think about this, there's a lot of opportunity and kind of that verticalized solution space where people both already have and can generate that proprietary data that makes them that much better than a OpenAI or kind of generic solution.
Tremendous. And Mark, we were talking about boards, which I think a good segue, because you and especially you and Dave have presented to several boards of public companies over the last year or so. What's the guidance you're going to give boards over the course of the year as they ask about an AI strategy?
Yeah, I think first and foremost, they've got to understand the basics, right? And it's a topic that can be obtuse, like any technology topic can be. That we all in every industry, you use secret terms in order to be able to hold that only to yourself. I've seen it so much in my life that it's almost, I find it comical. And so you've got to kind of understand that when they're saying this, they mean that, and you can easily get through that. And so I think a session that just does a basic, let's talk about what AI means, what are terms, how to think about it, is really important for boards to do, however they do that. And then secondly, it's then important for them to hear from management what their intention is for AI. They need to ask management for a strategy, because this is one of those technologies that's going to basically create winners and losers very rapidly versus other technologies. If you look at the adoption curve of ChatGPT, I won't get my facts completely correct, but basically in a few weeks, we had adoption levels that typically took decades. in technologies from many years ago for me, and then newer technologies like the use of social media, happened in a matter of a couple of years, and then some technologies went in a matter of a few months. This is a technology that's literally in weeks had millions and tens of millions of users globally. That means it's going to then follow very rapidly into the work environment. It already is there. And so we need to understand, is the company going to keep any kind of ChatGPT, for example, or BERT or others out of their environment and not allow the employee to use it? We know many companies that are doing that. Are they trying to do 25 projects? Or are they trying to do 2? Are they trying to drive productivity? Or are they trying to drive growth? And so those are the kind of basic questions that the board needs to form with management and really ask them how they're going about it. But they need to make sure they're going about it. And then the last thing I'd say is that the board needs to understand that there is failure. And as long as the company hasn't built its future or its balance sheet on the test they're doing or the experiment they're doing, which obviously good experimentation doesn't do, then accept that failure is going to occur. And the question then is, what did we learn from that failure? And can we apply it to the next thing we want to experiment on to be successful? And I think we can't underestimate the importance of letting an organization try and fail, as long as, again, it's not a life-threatening kind of issue. Because without that, you can't learn, and you really freeze the organization and don't let it innovate. And again, this is an innovation where I had a discussion with a friend at lunch today, and we were talking about asset management, which is an industry that has fabulous profit margins and tends not to like innovation as things go. And imagine a firm that says, I'm going to put my head in the sand and not worry about this AI thing, kind of cute, interesting, but doesn't feel like something I should pay attention to because I'm an asset manager and I know what I'm doing. And somebody who says, no, this is a tool that really is going to enhance my productivity across a number of areas, from writing reports to discovering opportunities in the data, whatever else it might be. What are those two companies going to look like in 5 years' time? They're going to look completely different, right? One's going to have removed a tremendous amount of cost, the other will not. One's going to find opportunities for growth, the other one will not. And that's going to start to separate the industry, any industry, much faster than it might normally go. And that's why boards need to hold management accountable for a plan. And then for the work that goes with that plan.
It's something that's always been very, very consistent, and it's I love to hear that from you, because it's part of sort of our values at Vestigo, which is like sort of specific failures are completely okay as long as we're learning. How do we set up a culture that, like, we are experimenting with stakes that we can afford to lose, and understanding that the way that we experiment, the way that we learn, the way that we fail and succeed, has kind of a convex payoff when we learn the thing for the next time. So if that's the kind of strategic guidance that maybe would be sort of best practices from the top of the organization, if you kind of think about, at the practitioner level, Nick, maybe, back to you, specific use cases that you're seeing to really take off, not only, from your own work as an AI practitioner, but across, candidly, your peer set who are operating inside of businesses, operating inside of financial services, building software using technology.
Yeah, so I would say that what we're starting to see a lot of today is the application of like LLMs into a world that sort of has solutions today, but similar to what we were touching on earlier around like the original kind of promise of RPA, where it sort of failed to actually reach like the promise of what they wanted to originally deliver. Like, I think the one thing that immediately sticks out to me is sort of the like being able to extract data out of PDFs. I think like historically, there's a bunch of companies that are able to do that today, like relatively well. I know for the most part, a lot of my peers or kind of portfolio companies that we've spoken to have found a lot of issues with those processes. Generally, the data might be like they pulled out the wrong data, or it's just incorrect or inaccurate. So a lot of use cases today that we're seeing is, or kind of all around, how can you use LLMs to take all of this unstructured data and put it in a structured format that could be utilized for a variety of different things. And this ranges from like using OCR technology, where you're using an LLM to go in at an image, take out all the relevant data points out, or it's just as simple as you have a PDF And then you can feed that to an LLM and it'll be able to process it and take all the data out you need. I think like as like that's like a baseline use case. Obviously from there you can expand that even further with like the more data that you actually have, that's now in say stored in a central database, you can start doing a lot more automation around originating, kind of automating processes in like claims management, which I know Roots does today. So I think like there's a lot of those pieces that could be automated and that you're kind of seeing today. And then I think there's sort of an open question and there's a lot of exploring, I think, happening now around like LLM use cases and like more and more complex workflows as people start to get more kind of comfortable with an LLM telling itself to do another task, which I think people are kind of developing the skill set to work on that now. But a lot of that, I would say, are called like AI agents, where you sort of have a large language model telling itself to go, hey, maybe because of this input, maybe I want to go work on this. And I think that is going to develop some pretty interesting use cases in a variety of workflows that are kind of ranging from a lot of complexity.
Absolutely tremendous. And viewers, thank you all for these questions. And I just noticed that one of you has been blowing up my cell phone with a question for Ian, which is a very good place on which to end. And that is Ian. One of you wants to know what Ian is optimistic about in 2024, as do I actually.
You don't hear it every day. So it really, there's this whole conversation. We could go in different elements across the spectrum of solution sets that are coming out that I'm excited about, but it really does range from the protection that's going to happen in a more advanced way with machine learning and AI taking place. So look at companies like Formotive and detecting fraud early, to build on Mark's conversation around the institutions that aren't holding the ice cube that will melt. Those that are thinking about innovation will unleash things they've never been able to unleash before because they've been sitting on data for so long. They now, if they have the creative thought process, the power to unleash amazing things through this new technology, right down to where we are. And you hear me say all the time, we're like farmers. Our hands are in the soil with these early stage companies. These founders that we're meeting every day are energized to change the world using this technology. And as I think about, and I'll look to Mark and Dave, because we all have a little gray hair, but the time of watching the democratization of financial services happen here in the United States, North America, and across the globe has all been about technology evolution, right? So, go back to the early days of services, Mark, where you were involved. You had a team of people that now can be solved with the swipe of a finger on a mobile phone. So we're entering a phase now where across the value chain, as LLMs predict the next word, AIs will be used to help optimize the institutions' engagement with the advisor, with the individual investor, and ultimately, I think, help us on life's journey for better outcomes. So I'm really excited about how machine learning and how AI will help humanity with the next thing to consider and the next possible solution that takes friction out of the world, not just in FinTech, but really across all things. So it's an amazing time to be where we are.
Fabulous. Well, thank you all, my esteemed colleagues, for joining the session today and providing your wisdom. Thank you all, the millions of you who tuned in to watch us live. We're extremely flattered, and thank you so much for being a part of the Vestigo journey. And that's all for now, and have a very good night.
Thank you.